The three major indices in America today because they all fell quite significantly, and for a fifth consecutive session as well, the S&P, the Dow and the NASDAQ were down, and we're looking at yearly lows now. This is going back to actually this time last year and before that. So it's all in the anticipation of what the Fed is going to do in tonight's meeting. Some people say it's 1.5% rate hike, so 50 basis points. Others are saying 75 basis point hike. So because of this, we've seen stocks lower, we've seen indices fall quite significantly, and in doing so we've seen fresh lows. Good opportunities for bears as well, because we are in a fully fledged bear market as well, so we'll have to look out for what the opportunities are. So let's just take a look at the figures here. So the Dow sank 876 points or 2.8%. NASDAQ was down by nearly 5% more significantly, and the S&P almost 4%, and that's 20% below its new record that it set in January. So quite a fall from grace for the S&P. So as I said, this is all in line with the Fed's move tonight. So it'll be very, very interesting reading and seeing what the indices and even the stocks are going to make of this when the Fed does, especially supposedly, raise its rate by at least 50 basis points. So it did say it was going to keep going up until 4% by the end of the year. Currently we're roughly hovering around 1%. Could it go to 1.5, 1.75? We'll have to wait and see. So this all comes from the consumer price index that was very, very low last week as well, giving traders a fresh impetus that the Fed will be more aggressive in its rate hikes as well. So what does that mean for the charts? Well, and for the indices, as you can see here, for the Dow, we are now looking at these fresh lows. We did see this back in February 2021, over a year ago now, and as you can see, a lot of these indices made these fresh highs in the past few sessions. But as you can see from these peaks, we are looking at a bit like a dead cat bounce now. We are bouncing higher, hitting these lower lows, and then going for these peaks. But now, as you can see, markets are on the decline, so we are expecting another leg to the downside here. But then we can find another move up and then another leg lower. So we'll see what is in store for the Dow, because a lot of these indices are going in the same direction as well. As you can see, we're trading very fastly under the Ichimoku cloud as well, so we're in a very, very vast bear market as well. We were looking at a slight bullish reversal, but this RSI leg here just dropped a little bit lower than what we had liked it to. So if the divergence was just on the upside here, we could see a bit more of a divergence here, but it did not take effect. So it is looking likely now that we are in a bear market. We are going to be starting to move lower. That 30,000 handle for the Dow will be quite significant for a lot of investors, because psychological levels are always important. Once it cracks, it can keep pushing lower or higher depending on if it's a bearish or bullish turn. So let's just take a look on the S&P as well. Very interesting for the S&P, because big gaps in the market here, and this could have actually easily turned into more of an aggressive bear market. Again, going back to the end of 2020, beginning of 2021, where we saw these fresh peaks. As you can see here, these fresh record highs that were only seen in January, not so long ago. If you think 5 or 6 months ago, it's not really too far away. But as you can see here, in a vast downturn channel now, and we are looking to see any sign of impetus to the upside. I've got this on the daily chart, by the way, just for your easier viewing. But if we look into more closely, we are seeing now more of a decline in the S&P. We are looking at prices could crack the 3,700 area, and in doing so we could see more psychological pressure to the downside. But it's all about the Fed's decision tonight. Is it already priced in? Well, the dollar has been quite significant in the last few sessions, or for the last few months actually, in being priced in on these rate hikes. But it just seems like the indices and stocks are now suffering, seem to be coming into terms with this news. And obviously every Fed meeting that we have from now until the end of the year will be one to watch, that's for sure. So we'll see what the outcome is there. Just a quick look on the NASDAQ as well, because we are now looking again, as you can see, a lot like the Dow and the S&P going into this bearish territory from the recent peaks that we saw, as I said, not so long ago, 5 or 6 months ago. But since then we've had this dead cat bounce kind of scenario happening, and we could actually start progressing even lower. It's pretty much the same on the RSI for all the indices as well. We were looking at a possible divergence, but it just seems there's a slight divergence here, but not enough to really give us a bullish impulse at the moment. So we are expecting another leg lower, roughly just below the 11,000 mark, roughly about the 10,800, and then a bounce higher. But we'll see if that comes into fruition. Obviously, we've got the whole trading day to go before we get to the Fed's decision later tonight. So that will be something to keep an eye out for. So very fundamentally driven at the moment. Keep an eye out for the Fed meeting, and we'll see what the markets have in store next time around. Bye for now.